is up, guys? Welcome back to my channel. If you're new here, it says about 65% of you watching are new. What are you doing? Make sure to subscribe to my channel. We have a great time talking about stocks, investments, tech news, and everything like that. Today we're going to talk about Palantir because there's been some pretty surprising news, let's just say, with Palantir. Insiders have sold over 24 million shares since the share lockout expiration in February. So Palantir went public back in, I believe, September of 2020. Yeah, September 2020. And they had a 3-month lockout period, a couple-month lockout period. And on February 18th, 2021, shareholders, insiders could now sell their shares. It was expected that they would be selling, but not that much. So we've seen over 24 million shares in the last 4 weeks already been sold of Palantir, and a lot of people are wondering, should you be concerned about this, or is there nothing to worry about? Is it still a great company to own? So we're going to go over all of that. Starting off, let's first go over Palantir, just some basics. A lot of you guys probably know this. Palantir is a big data company. They have a lot of government contracts with large corporations. They have a big contract. They recently signed a partnership with AWS, and they also have a partnership with IBM. They've recently increased their sales team, really ramping that up, trying to bring their business to the next level. And another thing which I really like about the company is that they recently changed their payment model, their business model. So prior to just this month, previously they had only allowed large contracts that were multi-year agreements that required companies to pay a lot of money up front. And that really hindered some of their growth because some of the smaller companies, mid-cap or even small-cap companies, they weren't able to do this. They didn't want to spend millions of dollars up front. So now what Palantir does is they offer a little better business model, different payment structure that allows these smaller companies to now pay. So previously it had to be like a 3-year contract, and a lot of that money had to be paid up front. Now they don't make it so it has to be a long-term contract, and they're offering other ways for companies to pay. So they're really starting to expand who can be their customer. And I think that is great because no matter whether you sell, let's say you're a small business, or you sell clothing online, or you're AWS or Netflix or anything, no matter what company you are, you need to have data. And Palantir is a big data company. They analyze data, and that's what they do. So restricting themselves with the payment model to only having large contracts that were multi-year agreements, while it's great for recurring revenue, it's great for their balance sheet, was cutting out some customers that may have wanted to do business with them but weren't able to pay a large amount up front or simply didn't want to. So that's one good thing I like about them. But getting into what has been a little concerning is that since February 18th, over 24 million of the company's shares have been sold by insiders, and that's a lot. Palantir's co-founder, Stephen Cohen, sold 97.1% of his shares within the span of 4 weeks. And in addition to him, the firm's chief legal and business affairs officer, Ryan Taylor, sold about 21% of his total shares within just 5 days of that lockout period. So that has been a little concerning. Two things to think of when they start selling shares. The first reason is that they have every right to do this. They can book their profits. They've been with the company for years, and they're allowed to book their profits to accumulate wealth, and that is something that a lot of people do. It was expected that a lot of insiders would sell shares, but the downside is it doesn't look good to an outside person, like an investor or someone who's not in the company. It doesn't look good when the co-founder decides to sell 97% of his shares. It sort of suggests that he isn't too enthusiastic about the company, that he thinks his money's better off elsewhere, that he thinks there are better opportunities for investors out there. So if the company's own co-founder doesn't believe in them, it makes it just a little more concerning to outside investors. However, the other possibility, the other side to this, is that maybe these insiders know that they're going to get compensated and paid with shares of the company. And as part of their compensation packages, a lot of them get paid thousands of shares, and they may think that they want to just take the money that they have made from their original shares in the company, keep getting their salary and get more shares, but sell off whatever they already had. And that's a big possibility too. So maybe they just wanted to secure some of their wealth, secure some of their money outside of Palantir, and then just continue to accumulate more shares over time with their compensation packages. So either way, there's nothing wrong with them selling it, but it doesn't look great, especially when the co-founder is doing this. So right now, the way I see Palantir is it's still a very high growth company. I love the stock, especially around the current price, which is right around the $22, $23 per share range. It has a market cap of around $41 billion, and revenue is growing about 50% year over year. So still a very high growth company. And what I like about them, which I spoke about previously, is they're ramping up their sales team, increasing that. They have big partnerships with AWS and IBM. They have contracts with military and the Air Force, and they're working with governments all across the world. My opinion, if you're looking for a company to do business with, if they have large government contracts, that's like a check of a stamp of approval that they are a trustworthy company. In my opinion, having these big government contracts is going to lead to more and more business down the road. And the other thing I like about them is that now they've expanded their business model to really allow smaller players, small cap companies, maybe about $1 billion in market cap or a couple $100 million in market cap, allow those companies to now do business with them, because Palantir can do business with any company. It's just their format, their business model before with these contracts made it a little harder. So in my opinion, I think now with this change, it is really a great idea, and it's going to lead to massive growth in the future. I think anything around the $20 range is a steal for this company long term, especially with the major partnerships they have, because they could be generating hundreds of millions of dollars in revenue just from their partnerships with AWS and IBM down the road. So my opinion, I think it's a great stock. It is concerning that they are selling shares. Insiders are selling a lot of shares, but it was expected with this lockout period on February 18th. And as long as we don't see this trend continue moving forward, I don't think there's anything to worry about at this point. But let me know what you guys think. That's all I got for you guys today. Hope you guys enjoyed today's video. Don't forget to get your 4 free stocks valued up to $1,600 when you download the Webull investing app using the link down below. I hope you enjoyed, and I'll see you guys in the next episode.